Hey folks, and welcome to the Pipnotic Symposium for the 27th of January 2021. Today we're going to have a look at ASH, the asset strength histogram. I'm going to show you how it's been used and also talk again a little bit about what it's showing, the information that's showing us and what we can do with it. Okay, before I do that, I'm just going to show a couple of trades that I took today. And I have a small live account, about 3,000 euros, and I use this to test the algos in the software because I don't feel that the demo accounts are good enough. And the reason I don't think so is because when you use a demo account, when I'm using a demo account, there's no emotional association or attachment to the account. But when there's money attached to it, even cents or dollars, then there's a certain shift in the state of the human being who's trading that account because there's real money. Okay, so you don't need big money, but you don't want no money. You need a tiny bit of money, a little bit of skin in the game, so that you treat this account like a live account. And I have this, and this is the one that I've been using to help validate some of the signals that I'm getting from the asset strength histogram and the asset strength reversion algo. Okay, so I'm just going to show you these trades. This one was on the Australian dollar, American dollar, and this was traded this morning. And the reason I thought that this would be an interesting trade was because that we started to notice that the asset strength histogram started to kind of turn around here at the top. And this is telling us something about the shift in flows. Okay, and also notice that we had just here, about the time I got onto the trade, about right here on this green candle, notice that it has started to shift negative. And when this happens, that means that we have a negative bias. Okay, and so when I saw that, I simply clicked into the trade. And I'm going to hold this trade until we reach an opposing area of this case demand, which could probably be somewhere down here. That would be the most logical place to get out of this trade. And the reason I say that is because this is essentially where this is the origin of that move. Okay, so if we go back to the whole right side, left side of the chart, go from here to the high. This is the buy side of the chart, and then we have the left side of the chart, which is here from the same low to the same high. Okay, and I'm not allowed to buy that position back until we reach an opposing area or opposing buy zone on the other side of the chart, which I have just around here. So when price gets here, this would probably be a pretty interesting place to get out of the trade. Okay, I mean, my entry's here, my stop's here, so at some point I may move my stop to break even, or maybe move it just up here so I have pretty much no risk in the trade. But there's something else that I'm paying attention to, and that is this. You can see that we're starting to expand. We're seeing expansion occurring. When this happens, this is typically due to the volatility of the asset increasing. And when this happens, that normally means that price is having a run. Okay, so if the opposite thing was happening, so if we saw we started to see contractions, instead of the bars going like that, it started to go like that, well then that would mean one of two things. The price is moving down and it's had a big run down, we're moving sideways and we're accumulating orders to move price lower, or we move down, we're moving sideways and we're accumulating orders to move price higher. Okay, and you don't know which one it is until you can see what price is reacting on. If this occurs down here, depending on what's going on in here and what this is doing, it could be either we could expect price to move away and higher, or begin to consume the liquidity at this area and begin to move lower. Okay, but we don't know yet because price has not yet reached that area. But that's what we're looking for when we see this kind of a pattern going on. Okay, so I'm just going to remove this, and we're going to look at the other trade. This was the pound American dollar, exact same trade pretty much, where we had a very similar thing occurring. Let's let this load, and you can see again here that this was a 30-minute trade. Our price kind of moved this top, price started to price was moving up here, and you could see that the price was doing a little bit of liquidity exploration. We're going higher, lower, higher, lower, higher, and then price came down, moved sideways, and this is where we left from. Okay, so this is, we're seeing price go higher, we're seeing the histogram go lower, okay, at a historical level over here, which is the daily supply. So when you see this going on, this is telling us that we are likely going to continue wriggling lower. Okay, currently price is sitting on this little area of demand just here, small continuation pattern, and so price could have a bounce like it looks like it's doing, go back over here, and then continue to move lower. But one thing that we have to be very mindful of here is that we do have the histogram that's moving higher, and we do have a positive mean, and that can mean a couple of things, but something that I find this to be very useful for is when we have a positive histogram and a positive mean, this often means that we have reached a turning point in the market. Okay, so if we go back to this, you can see how we have the positive and we have the mean, which is positive. If the mean, I'd be a little bit more comfortable if the mean was a little bit higher. If the mean was a little bit higher, I'd be very confident in selling from this point here. But price is currently just hovering just north of the mean, so that means that it could go either way. Due to the fact that we're sitting on this little area of demand, it means that we are obviously going to have to move up to attract higher prices in order to have another run down, if that's what we decide to do. And also on the bigger time frames, when we have seen this pair move up over the course of the past week or so. Okay, so there are a few things that are interesting in that trade, but what I do like is the fact that the cycles, we've had a high and we came down, you can see it went higher, it went lower, it went higher, and now we're running the highs, higher highs in price but lower lows in the histogram, and we're starting to reach a positive mean. And the reason this is interesting is because when the mean catches up with the histogram, well, that means that it's time to turn around. This is advertising prices that are very high. Okay, and you can see this playing out when you have these very bearish candle patterns as price left this area of sideways price movement. So we're distributing liquidity to do what? To move price lower. Okay, so these are the two trades that I've had today so far in this little test account. But if we look at something else, it doesn't really matter what it is, just need something new. If we have a look at this, this is the pound Kiwi. So if we have a look at this pair, you can see the price goes through these periods of expansion and contraction. And if we zoom out a little bit more, you can see that we have this envelope that kind of moves at the extremes of the histogram, and the bands move in towards each other and then move away. Here we had a period of expansion, then a bit of contraction, then expansion. Okay, and when you see this, when you see the expansion occurring like that, if you look up to the price, wasn't a very straight line, let's use this, about where it started around here, it means that we are likely going to see a very strong push either higher or lower. And when, as I mentioned earlier, you can see this happening when we have a positive mean and a positive histogram, there's about an 85% chance that the move is going to be in the opposite direction. So if this is positive, then you want to be selling. If it is negative, like you can see here, then you want to be buying. Okay, and this you'll see all over the place, and it's really, really powerful. When price starts to, when these bands, this envelope starts to get narrow, it means we have accumulation and distribution going on. Okay, and when this happens at a time that we have a negative histogram and a negative mean, well, then you want to start to look for buy positions, and you'll find that this almost always happens at, here you can see, here we have demand, just here. Price poked into the area, we had another go, liquidity exploration, price moves away, then we pop, we retrace to this, to the beginning of the buy zone, and then we leave. Okay, so that's essentially what we can see when we're using these tools. Let's do one more example, and then we'll wrap this up. I just want to keep this nice and short. If we have a look at the Euro Singapore dollar, this is the 30-minute chart. Okay, so what we can see here is a similar thing. So we had Okay, let's find something. Okay, so we had contraction, so we had a period of expansion, so an increase in volatility here, and then price finally started to move in. That means that we are looking to distribute liquidity from the sell side to positions. So on the buy side of the market, they're going to drive price lower. Okay, and the reason I say lower is because we had an upward sloping and positive mean and histogram just here telling us that we're probably going to start to have a move lower. Okay, and you can see the same thing happening here where we have negative histogram for a lot of the time. Then we have the mean starts to move down like this, and this is a difficult one to gauge because there are because the mean is moving from positive to negative territory, but it's staying more or less negative. And when you see something like this, then it's best to jump on the higher time frame to see what's going on with the slightly bigger time frames. And if we do that quickly, you can see that we had a period of expansion and then price started to contract. We had price begin to expand again, okay, and we expanded at a time where we had positive mean and histogram. What does that mean? Well, like we saw on the previous with the previous example, this means that we have a very high expectation that price is going to move lower around this point here, around this price point here. Okay, if you see that, okay, so this is the bit that we saw on the smaller time frame. Notice that we have a negative histogram here. We have a negative mean. This is telling us that we should be prepared for price to move higher. Okay, and price finally turns. It goes positive. The mean is negative, but notice that it starts to turn positive around here at the same time when we have a negative histogram, so right around here. So if you look up to where price is, okay, you find a low and then look left to see what price is reacting on, and there's probably an area of demand that price is reacting on, which would encourage us to entertain the idea of long positions. Okay, so as you saw on a 30-minute chart, this is very unclear. If you look on this time frame, a little bit clearer, but if we go to the 4-hour chart, there's probably much more clarity potentially. So let's have a look. Let it load. Okay, so here we have it. It's probably around here. But in this one tells us a little bit of a different story. We have a positive mean and a negative histogram. What does that mean? That means that the mean is positive and we're having a pullback. So this is the other setup where you have the trend and then you have the elastic band that is deviating. So if you have a positive mean and the histogram is negative, that means that the histogram is being pulled back and it'll snap back typically in the direction of the mean. Okay, and that's what we're seeing kind of going on here, how price kind of came down, liquidity exploration, we had a test, and we're doing this on the back side of this area of supply that now becomes demand, because these are often called flip zones and reference points for the future. So we had resistance, price accumulates below it, we consume the liquidity there, we pop down, then we move back into it. At the same time that we have a deviation from the mean to the negative side, telling us that we have a very high likelihood that price should be moving higher from this area of or support. Supply becomes demand from this little price point just here. Okay, good. Well, I shan't spend any more time. I hope this helps clear up any questions that you had. If not, let me know and I'll have another go. Thanks for watching.